August 26th, 2024. See, we're gapping up today above yesterday's high, or we didn't quite gap up above yesterday's high, but we are now trading above yesterday's high. And this is essentially a breakout of a breakout mode pattern that's going on in the daily chart. Thinkorswim's having some issues right now. I don't know why it won't give me the daily chart. Here, one second. I'll just pull it up on a different gadget. Okay. Okay, so this is a daily chart of the E-mini, and you can see we have an IOI pattern, and IOI patterns are breakout mode patterns. And in this area, it could be more of a final flag. When you read through the chapters on final flags in Al's books, he talks about basically breakout mode patterns. Like a tight trading range here, this was a final flag for the bulls. So even if we get a breakout to the upside, it's probably the last leg, and then you can see we traded back into the middle of the tight trading range. So you have to think of breakout mode and final flags are relatively similar in a lot of ways. And I think here it's important to recognize that we're breaking out above the IOI. And even if we do get one more leg up, I do think we'll probably end up coming back into this breakout mode pattern, more likely than not. Do we get to a new high first? We might. I mean, we're pretty close. We're obviously a lot closer than I thought we would be in this first leg up. But anyways, so today, what do the bulls want? The bulls want a breakout above this bar and a really strong follow-through bar, probably trying to get a vacuum test of the bar 716 close and this sell climax high. So this would be a resistance area if we were to get up to here around 57.15, which is only, 40 points away. So it's possible we end up getting some sort of bull trend day and we get there today. Is it likely? I don't think it's likely, but you can just basically pay attention over the first couple bars. And if we start to do something that looks like it's forming a bull trend, then there's an increased chance that we're going up into this area, which would be around the all-time high. Basically, the all-time high is going to be the target for any sort of bull trend day today. Yeah, Thinkorswim for some reason is not letting me load the weekly or daily charts. I have in my actual trading setup, I have the weekly chart, or sorry, I have a gadget with the daily chart already installed. So I just grabbed it and moved it over. This is the hourly chart, the Globex hourly chart that I like to look at sometimes. You can see we have some sort of spike here, a pullback, and then a bull channel, and we're in the bull channel. We're trying to get a breakout for the bulls above the bull channel. Oh, it's gross drawing. I guess my tools are a little bit different on this particular one. But you can see we're trying to get a breakout above the channel, and we'll see what ends up happening with that. Usually, breakouts above the channel is not overly successful. When you get a pullback from a breakout above a channel, it usually goes to the first target is the middle of the channel, and the second target is the bottom of the channel. So let's let this bar close. And why not? I'll look at this one too. This is the 15-minute chart. Or sorry, this is the Globex 5-minute chart. Breakout above a wedge. I thought I had a 15-minute chart on here. Yeah, it's not going to let me load it. Okay. So bar one, a bull bar, but we have a tail on the top. It's notable, I try to keep in mind the size of the bars. Like I thought these were a little bit smaller than we had been getting. And this is bar one of the week, and it's a 10-point bar. So that's reasonably big. Bar one is not able to close on its high. Had bar one been able to close on its high, it's possible we were trying to create some sort of open gap with the prior day's high. So if we raced right up through it and weren't able to get back to it, that would increase the bull's chances that we have a first open gap and a possible bull trend day. This is another possible open gap, but it looks like we're going to fill the gap, potential gap with this. We already did, and we're probably going to get back to this area as well. So it's not all that good. What if bar two closes exactly like it looks right now? Well, getting bigger, but it'll be an inside bar, a possible bull trap, so a failed breakout above yesterday's high and a credible high of the day. I sell it. I don't know. I'll probably just wait and see how it looks, but I don't usually like trading on the second bar of the day. I usually like to give the market 5 to 6 bars before I do anything. So what are the odds that we end up getting the bull trend day and this pullback, just a pullback, and then we just go straight up? I don't know. I mean, it's less than it was when bar one was closing up here. Again, bulls really wanted a bull bar closing on its high, and they just weren't able to get it. I'm gonna pause the screen for a few minutes, try to be a little better about this. So obviously, the bulls ended up buying as we got back to around the open of the day, and bar two looks like it might end up being an inside bar. We have an inside bar on bar two on Friday, and we have an inside bar on bar two on Thursday. So the market tends to like to repeat patterns. If you'll notice, on Thursday, the inside bar did not end up being the high of the day, and this did not end up being the low of the day. So do I think this is going to be the low of the day? Probably not. Is it a better than 20% chance that it's the low of the day? Because bar one on any given day has a 20% chance of being the low or the high of the day. So does this pattern we're seeing right now change those odds at all? If bar two can close on its high, it might be a little bit better. It might be more like 24, 25% chance. Just there's probably some sort of marginal increase if bar two can close on its high. But I think if bar two is a doji bar, it's pretty much still 20% chance. So I'm really not in a rush to do anything. Yeah, so disappointing. What do the Bulls see? The Bulls are hoping that this is a high one, so they want the gap up and the bull follow through bar as the start of their bull trend. They're hoping bar two is it is an inside bar, and it is a high one, and they're hoping that we're going to start a big bull trend from here. However, if you look at bar two, it's a bear bar, and not most traders do not want to buy above the bear bar, especially we're decently far above the average price. And the price action, you're trying to get some sort of breakout above the wedge, maybe a wedge here, one, two, three. You could argue spike, pull back, and just channel, break out of channel, but however you'd like to look at it. What's clear is that we're trying to get a breakout up here, and this is so far how your bull breakout looks. So if you're a bull, are you happy with bar two? Probably not. It's not a very good high one. It's a bear bar, so that means there's most likely sellers somewhere up here. And bar one had a big tail on the top as well. So as far as bull trends, this is not a very good one. What about the bears? Well, the bears are hoping bar two is a bull trap, or sorry, bar one is a bull trap, and that bar two is going to be the signal bar, and either bar three will be another inside bar, which would be a sell for a credible high of the day, or that bar three will break far below bar two and trap all the bulls into a bad long. We'll get some sort of bear trend. I think if bar three, well, I don't think it's not credible to sell below bar two. There's probably more buyers below than sellers. But if bar three is an inside bar closing near its low, then you can take it. Remember, inside bars and inside bars are just triangles on smaller time frames. So if you look at like a 1 minute chart right now, we're going to be forming some sort of triangle on it. See the higher lows and then the lower highs. So inside bars are just triangles on lower time frames. If this trades below two, it is not as good for the Bears. So there you go. That's disappointing for the Bears. Let's see if we break down below the low of the day and get to this high. Our 355 high from yesterday. There will probably be some sort of support there if we can get there. But again, not as strong for the Bears. Now bar two is your signal bar, and bar three is going to be your entry bar. If bar three closes on its low, it's probably still, you probably need to get a little bit bigger. So if bar three closes on its low below the low of bar one, so you get a breakout, I think it would be not unreasonable to sell it for a possible high of the day. Okay, now it's letting me. So just want to make sure. Perfect. Okay. So I can pull up these charts now. Everything's loading. But if R3 were to close on its low and below the low of bar one, then I think that would be a credible short for a possible high of the day. Am I going to take it? I might. It needs to get a little bit bigger than this, though. I don't want to sell it if it's right here. And honestly, it probably needs follow through anyways, but it's not. I don't think it's going to be wrong to take a small position. Again, this is a climactic breakout above this, so The setup itself probably isn't amazing, but I think the context for this kind of setup makes some sense. You can see, we got up here, we failed. We got up here, we failed. We got up here, we failed. So we're getting up here again. We might fail again. It's not a high probability trade if you sell below three. If it does close below one, it's not a very high probability trade. I don't not that's the low of the day. Maybe I don't know 40% chance, 35 to 40% chance, but you can get a pretty big move out of it if it is. So fine. So if this can close below one, I might sell small position size. That if I lose, it's going to be fine. It's not going to disrupt my day. Again, I think it's really important if you're, when you're starting out with trading to just really focus on the open and the opening patterns. It doesn't look like this is going to give me what I want in order to sell, so I'm probably just going to be on the sidelines here. Okay, so disappointing. What happened just there? Probably a lot of the bears who were selling, hoping that we were going to get the close below one, just ended up giving up. They didn't like the fact that we were still stalling in this area with only 15 to 20 seconds left in the bar, so they're buying back their shorts. So what do the bulls see? Well, the bulls see gap up and then bull trend bar closing relatively near its high, or at least decently above its midpoint, and they're thinking this is the start of a bull trend. This is a bad low one short, so buyers below, and they're looking for another leg up. Possible spike, gap, and bar one spike, and then pull back, and then maybe a channel upwards is somewhat the bulls could be looking for. The bears, they're still hoping this is a bull trap. They're trying to get the bulls to give up. You can see we went down on bar two and then back up, and then we went down on bar three, and then we tried to reverse up again. So it's some sort of two-legged correction on a lower time frame. What do the bears want here? The bears want to see the bulls give up. So they want a big bear bar closing somewhere down here. If they can get it, it would increase the chances we've seen the high of the day. So if you start to get a big bear bar closing near its low on bar four, it's not that common, but it definitely happens where the bulls, that would mean the bulls have given up. Now the bears would need to sell in order to continue the market down. What do the bulls want here? I mean, pretty, the normal, pretty much any bull bar closing near its high. But I don't think they're going to get it. I think if we do get above bar three, there's going to be sellers above. So it looks like the bulls are starting to give up, and we're starting to get a bear bar closing near its low. So this is the selling that I mentioned right here is the bulls giving up on their bull trend. And that's what's going to cause this bear bar. Sometimes this bear bar, I mean, it'll happen in the last minute or two. It's been pretty steadily forming, but sometimes it'll be up here until the last minute or two and then just drop. What are the odds that this is the high of the day? So we got a bull trap above yesterday's high. This is the high of the day, and we sell off and go outside down. What are the odds of that? Probably pretty low. I think one of the reasons is that if you look at this, we have a spike and a pullback and then a channel. So the lows of the channels are going to be support. So even if we get into this area, there's probably going to be a lot of buyers in this area, and we're probably going to form a trading range with this whole general area if we do sell off. Sometimes the give up bar doesn't come after three bars. Sometimes you need a fourth bar. So if the Bears get another bar that looks kind of like three right now, if another bar closing somewhere down here, it's possible that then the Bulls will give up. Remember, I mentioned quite a few times that usually a pullback that's two bars against you. So two bars. Look at these two, one bar and then a bull bar, and then one bar and then a bull bar, one bar. Okay, two bars and then a bull bar. And I'm not sure if this doji. Okay, so this was three bars, but you can see it was already in a tight range versus with a strong spike. Versus this, then three straight bars would not be what you want to see. So it would be reasonable, were you long for any reason, to be getting out below bar four, in my opinion. Could sell below four, if it closes on its low. You could probably sell it and take a chance that we've seen the high of the day, but it doesn't look like it's going to close on its low. Yeah, so nothing to do. Just better to wait. it's possible, the Bears could get frustrated here that they haven't gotten a bear bar closing near its low yet. And sometimes you get a bull bar on, bar five here. But even if we get a bull bar, I still think we're probably a little bit more bearish. We're probably still always in long. The Bears need a bear bar closing near its low, I think, to make the market always in short. So should we get another bear bar here, I think that would make the market always in short. So let's see if they can get it. If we do get a big bear bar closing near its low here, it would symbolize the bulls have given up. And then you would need a second consecutive bear bar to convince me that the bears are selling. So if 5 is a big bar, I'm going to turn this study on for. So if 5 is a big bear bar closing near its low, then you probably will need one more bar to truly convince traders it's always in short, and not just trading range always in short. Because when you flip to always in short and trading range, so if bar 5 closes on or near its low, let's say it looks like 78, but it closes on its low, that would flip the market to always in short. But in trading ranges, right as the market will flip to always in short, clearly it will reverse. And right as it flips to always in long, clearly it'll reverse. A good example of that is right here. You can see, so we're always in long. This is where we're clearly always in long. We were here, but then this is disappointing, but clearly always in long 11. Reverse, right? Are we clearly always in short here? Probably not. Are we clearly always in short here? Probably not. It's close, but probably still more always in long. Bam, clearly always in short, and now we're reversing. Are we always in long yet? Probably not quite. How about now? Probably not quite, maybe. And then here, I think we're probably always in long, and now we're definitely always in long. And then we reverse again. Then, this was a breakout attempt, so it ended up being a little bit different here. We were always in short for a little bit, but you got to understand the point that I'm trying to make. So, always in trading. The reason always in trading can be difficult sometimes is because you have to sit through trading ranges, and you sometimes have to sit through really, really deep pullbacks, and that's hard to do. So, always in trading is a lot less effective in trading ranges unless you are using an extremely wide stop and you're just willing to sit through, a lot of uncomfortable pullbacks. The reality is, if you bought above 40 on Friday, there was no real reason to exit between 51 and 67 if you were just holding for always in. But a lot of traders have a pretty good profit at that point and would rather not sit through the pullback, so they won't. But you could just sit through the whole thing, but you can obviously understand by looking at it that that's a difficult thing to do. The close of this bar is important. I think a bull close here symbolizes more of a trading range, and it's probably going to be a trading range regardless. But if we get a bear close here, 4 straight bear closes would be really disappointing for the bulls. So I still don't think the odds are good enough that we've seen the high of the day to sell anything. And even if 5 is a big bear bar closing here, it's low. Odds are it's going to pull back, and you'll get a chance to sell a pullback. So watch closely here on bar 5. See if the bulls give up towards the end. You can see they're still holding the gap open with the 78 high, but I don't think that's going to last. I think we're probably going to close that gap. Okay, probably going to do it right now, I guess. So do you sell below 5 if it closes on its low? Again, I think if it closes on its low, I think bulls are giving up, but you need 2 bars. And my logic for the reason why you need 2 bars is the first bar would be bears giving up, bulls giving up. So this closes on its low. I think that's the bulls. The selling here is the bulls giving up, and then you need another bar closing near its low to convince me the bears are selling. So that's why a lot of times after these climactic bars, you get all these pullbacks, 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 and then bear bar closing near its low. This is just the bulls giving up. So we might have to pull back here before we go lower. And if we do pull back, what's an obvious target? 50% correction. So some bears, we're probably always in short, right, on the close of bar five. So some bears, they say, yeah, I don't want to sell below the bar, but if I can improve my risk reward and sell a 50% pullback, maybe you put a stop above here. You could. It's probably not wrong to put a stop above bar two, but if you're doing that, you're betting on the low of the day, or we've seen the high of the day, and it's not as great. Some traders would prefer to use a wide stop, betting that we have four straight bear closes, 2 through 5, and even if we do rally, it's going to be a minor reversal. So they'll sell here and they'll scale in more here and probably have a stop somewhere, a measured move plus a little bit. So the limit order bears, maybe they're selling, the theoretical algorithmic trade to sell the 50% pullback, sell more here, and have a pretty wide stop and be willing to scale in. Betting against a bull trend day, right? You're betting on anything the bulls do here being a leg in a trading range. So I would watch closely at that 50% pullback, see if traders are selling it. But a bear who sells the close of 5 and is willing to scale in is probably going to make money here. We haven't quite gotten to that 50% pullback yet. We're pretty early in the bar still. But, what if this is another bear bar? I'm probably just going to let it go. I'd rather sell a pullback. So I want a pullback in some sort of double top, and then I want to sell that for a possible high of the day. I'm a little bit more bearish right now on the day because I think we're a bit overdone on the daily chart and the IOI pattern. 50% chance in general when you get a breakout mode pattern, 50% chance the first breakout above fails. It's probably relatively similar chance that 50% chance the breakout above here fails. The IOI pattern. So this is on the daily chart. This is a credible. Well, it's not great. It's probably more of a final flag, but theoretically credible buy above Friday's high. So I don't think it's a great trade though. So I'm wondering if those traders are going to end up getting trapped. The traders who would take that. So far, too, the inside bar still holding as the high of the day. Okay, so an inside bar on bar 6, it's a high one buy for the bulls. Sometimes on bar 7, like we did on Friday, you can see we get those, really crazy moves. Um, the market, it does it. It's definitely not all the time. I don't know, maybe 30% of the time, something like that. On bar 7, you just get a crazy move, but it definitely happens enough that it's worth accounting for. So do you want to buy above bar 6? The bulls, they see the breakout on bar 1 above yesterday's high. They see this whole thing as a pullback. And however, I don't think 4 straight bear bars is pullback territory anymore. I think it's trading range territory. The bears, they see the high 1 as well, but it's a high 1 and for them a bear trend. So I think the worst case scenario, the bears are thinking worst case scenario trading range. So they're probably pretty eager to sell around the 50% pullback. You can see we're not quite reaching it. Um, you know, this, we could get a couple legs sideways down. So let's say we could go down for the next. See, first off, I want to sell, but I want to sell higher. So I have a bit of a downside bias right now because I think, like I mentioned, those traders on the trading ring might get trapped. You can see we just went below bar 1, so it's low 1 short for the bears. But do you want to sell below a bull bar 7, or bar 6? No, not really. So what are the bulls looking for now? Well, the more reasonable argument for the bulls would be that this is a trading range and we're looking for the bottom of the trading range. And that this is going to end up being, potentially a wedge as a pullback. So let's say we get 3 pushes down and we start getting good bull bars closing near their highs, then that could be a credible argument that we just had a wedge pullback and a reversal down. Yeah, so maybe of the bodies, we got to the 50% pullback. Not quite. So you can see why it's not great to be short right now. Traders are buying the moving average. Again, the bulls are still hoping this is some sort of a pullback, and they're hoping to get a leg up in the trading range. They don't mind if we go a little bit lower, so long as it's in a more controlled fashion and we don't start to get some sort of quote unquote free fall sell off. We don't get consecutive bear bars closing near their lows and things like that. If we're not getting that, then I think a lot of traders a lot of bears will be okay with the market going a little bit lower because they can look for some sort of wedge. Sorry, a lot of bulls would be okay with the market going a little bit lower because they can look for some sort of wedge. And it's kind of similar for the bears here. So the bears, they don't mind if we go a little bit higher because they have the 4 straight bear bars from bar 2 through bar 5. So to them, if we do go a little bit higher, it's probably going to be some sort of double top. So the bears are looking for a double top here and a sell off, maybe down to yesterday's close. I still think the bottom of the bull channel around bar 54 low from yesterday, that tight trading range, this area really has potential to be a magnet if we do go down. But again, there's nothing to do yet. So it's just better to wait. What if 7 closes on its high? Probably not worth buying. Again, outside up, so a little bit of a bull surprise if 7 can close like on its high and look really pretty much perfect. It would be a little bit of a bull surprise, enough to get another leg sideways to up, but not enough to make me think that it's the start of a bull trend. We also did not touch the moving average. And generally, after 4 straight bear bars, if you get close to the moving average and do not touch it, then the reversal is not quite as good as it could be. The reversal is in, the context for this reversal up is bad anyways. We're not in a very bullish area just on the daily chart period right now. So I don't really think, even if we do go up a little bit, I'm not sure the reversal up is going to last. So always important to look at the daily chart and think about what the next bar might look like. Again, if you look at a daily chart that is 24 hours, which I like to do a lot, it looks the same as a 5-minute chart. And so what you can just do is, if this was a 5-minute chart, what bar would I be expecting? Remember, time patterns are fractal, right? So anything that works on one time frame works on any other time frame. And since the patterns are fractal, you can apply it to any time frame. So if this was the 5-minute chart, let's pretend, think hard about this bar and what happens sometimes after this bar. And the answer you'll probably come to is occasionally we'll get an upside breakout. It's a relatively neutral area. We're probably at the top of this leg in the trading range, but it was strong enough that you can't be surprised if we do rally up to this magnet. We might have to get a vacuum test of the magnet. However, it's also very possible that the bulls give up. We get a couple legs sideways to down, and then we get the second leg up from this. Because remember, on an even higher time frame chart, like a weekly chart, obviously, this is all one big leg up. So again, does this look all that bullish? Well, these 3 bars do, but it's following this. So, what is there really? To me, it's big up, big down, probably big confusion. So 7, a doji bar. I still think nothing to do. Sellers above, if we go above 7, probably if we start to sell off here, bears might start buying back shorts. Disappointed in how 7 closed. And if 8 is a bull bar closing near its high, it's still really not worth doing anything. I think it's probably just better to be on the sidelines right now. Again, I'm looking for us to rally back up towards the high of the day, maybe get a small new high of the day and get a reversal down. Or I'm looking for some sort of sell off and a wedge and then a reversal back up. What would I rather do? I think a better setup would be if we got a pullback and then started to go down, but I'm not that convinced that we're going to get it. I hope we do, but there's also the part of me that knows if I hope we get a bounce and I want to sell a pullback, there's probably a lot of traders that hope we get a bounce and want to sell a pullback. So it's a possible bear trend, but again, look at the tails: 2, 3, 4, 7, 5 even. So we have tails. There's not a single strong bear bar closing near its low right now. So to me, this is probably a bit more of a trading range. You have to keep in mind the channel down is relatively tight from bar 2 to bar 7, especially if 8 can close on its low. It's a pretty tight channel down. So the first reversal up might be minor because on a higher time frame chart, like a 15-minute chart, let's look at 15-minute chart should be fine. But it's a breakout, right? So you have to keep that in mind. Some sort of break. Well, this is not illustrating my point, but it kind of is in the way that it's not that good. But if 7 can close on its low, 8 can close on its low, it's a possible tight channel down. Again, I would like to see 8 be a bull bar, get some sort of small rally, very controlled rally up to the top of the range, and then a reversal back down. Okay, so you can see we're selling off a little bit on bar 8 to around yesterday's close. The bears want to get a close below the moving average. What are the chances we've seen the high of the day? I don't know, maybe 55%, maybe 60. I think that, I would not be surprised if bar 9 is a bull bar, because bar 8, it's good for the bears, but it's pretty climactic, and this mostly looks like a trading range. So bar 8 might be more of a buy the close bar than a sell the close bar. So I wouldn't be surprised if bar 9 is a decently large bull bar. We'll see though. Might not even trigger below bar 8. This is I think one of those situations where some bulls, they'll buy the close of bar 8. It's a low probability trade, but you could buy the close of 8, put a stop below, risk a point, and try to make like 10. So it's not wrong to do that. They would be stopped out now sometimes, but that'll happen pretty quickly, obviously, a lot of the time. I think that us going below 8 decreases the chances of a big bull bar here, but we very well still might get one. Am I going to buy if we get a bull bar? Probably not. Not, maybe. I'll kind of have to see how it looks, to be honest. I'm just not that bullish. Yeah, and if 2 ends up being the high of the day and you missed out on the sell off, it's fine. I don't think there's been a single reasonable sell yet today until maybe bar 8, but even 8, it looks too climactic for me. I'm not really that interested in taking it. What if 9 is another bear bar, closing here it's low? I don't know. It depends on the size of it. If it's small like it is right now, I'm not going to sell. That's waning momentum. But you can see not a lot of downside pressure right now on bar 9. It seems like we're halfway through the bar, and the price seems pretty fair to most people. So if you sold below 8, do you have a huge sense of downside urgency right now? Probably not. So probably better to just be flat. So what a trader's looking for right here? Well, the bulls really want to find a way to get this bar to close on its high, um, so that it's possible, a high 2 on the open, pullback. So breakout, pullback, high 1, pullback, high 2. So the bulls want high 2 on the open, but I don't think bar 9 is going to do enough to reverse bar 8. I think that if bar 9 closes on its low, I might look to buy if we get one more leg down. Let's say bar 9 closes on its high right now. I will want to see one more leg down, and then I'll look to buy and look to get rally back up to probably the bar 8 high, which is a sell climax high. And sell climax highs are magnets. So if bar 9 closes on its high right here, I'm still not going to buy. But if we get bar 9 closing on its high and then one more leg down, then I'll buy. What do I need to sell? Maybe some sort of double top with the bar 8 high would be reasonable. We're still pretty early in the day, so if you're short right now, well, I'll wait for the bar to close. I assume it's going to close around the bar 8 low, somewhere in that area. Seems like it's what it wants to do. It would be important for the Bulls if this was a bull close, because then it would not technically be follow through for the Bears. If the Bears get any sort of follow through here, okay, so the Bears have some sort of follow through. So if you're selling the close of 9, you're selling at a better price than you would have been able to at 8. So there's something a little bit wrong with that. However, some traders will see 8 and then they were hoping just to not get trapped. So they weren't willing to sell 8. They were just hoping 9 wouldn't be a big bull bar closing near a tie. And since it isn't a big bull bar closing near a tie, that's exactly why they're selling on the close of 9 here. So the Bears, they didn't sell 8. They were thinking to themselves, yeah, well, we might get trapped, so I'd rather not. And then you get a bear bar on 9. Any bear bar would have done a bull bar, they would probably not be selling. But you get any sort of bear bar on bar 9, and some bears will say, well, okay, now I know it's not an immediate trap, so they sell the close, and that's what's going on right here on bar 10. Is it a high probability, trade? Not really, but I don't think anything selling below 8, selling a close of 9. I don't think any of that stuff is very high probability. So it's probably not great. You can see we have an open gap for the Bulls with the bar 7 low and the bar 9 high, where it's probably going to close. I don't know if it closes immediately, but it'll probably close. So probably going to pause for a second here. What could be going on right now? Um, I mentioned earlier in the video when you test the top of a channel and you try to break out and it fails, then you oftentimes try to test the midpoint and then the bottom. You can see this is the top. And then you see where the bar 67 low and the bar 76 low. So it's possible we're just testing the bottom of the channel here. So those bears who sold the close of 9, it was reasonable to sell below 8, but I just don't think it was great. So you can sell below 10 here, but you're going to sit through a pullback if you sell below 10. So where do I think we're going? I don't know. We might go somewhere into here. We might go straight down to it. I didn't think it was all that likely on the open because we didn't have any good, anything that was great to sell below. The most reasonable trade of the day so far for stop orders would be selling below 8. And even then, I think you probably made a 5-point scalp so far. Just going to look. Yeah, so if you sold below here, your 5-point scalp would be at 56.45 flat. As right there. So the Bears, the only real stop order so far on the day that has any credibility, I think, would be selling below 8. And those Bears were able to make a 5-point scalp. And then there was a tail, so they might have been buying back shorts at 5 points. They might continue to buy back shorts, and that could cause a bull bar on 11. As you can tell, I'm not overly enthusiastic about being short right now. You can do it, but you're trading if it's more of an always in short kind of trade. If you're selling right here, and you're probably going to sit through a pullback. It's true that bar 7 through 10 might be strong enough to get a lower high, but I'm not sure that it's worth being short here. Might be better to look at sell a pullback. So you can see, this is why I wasn't as enthusiastic about being short, because this bar on bar 11 has potential. Obviously, it can sell off and it can become a bear bar, but there's definitely potential for this to become a bull bar that's closing above, or at least trades above the bar 10 high. And if you're short right now, you can probably just feel it, but you think, well, this really isn't all that great, and I think I want it to get stronger if I'm going to stay short. But the bears who sold below 8 are already scalping with 5 points, and we seem pretty intent on doing so. Not really as great. I actually want to look at something real quick. Sorry, I'm just going to look on my other screen for a second. So this is, I suppose not as important. It doesn't change anything on the 5 minute chart, but it's just something to notice. The bears who got short for any reason during here, after we started to bounce, there was a quick sell off during 12, and then it bounced. If you saw it, and you can see the bears as it traded back to around that entry price, around this entry price, the bar 10 close. The bears who sold it for any reason were not liking how bar 11 was behaving, and it was starting to bounce, and so they just bought back their shorts at the market. And so that's part of what we're seeing here is bears buying back shorts at the market. Now, does that qualify as the chance that bears had to get out? So if 11 is a bull bar closing near its high, can you consider the bar 10 close tested because it got tested on a 1 minute chart? No. Um, I think that we're still going back to the close of bar 10, even if bar 11 closes high, because it's going to be a magnet. Does it mean we go immediately there? No, I think we're probably going to get a couple legs sideways to up, and then we might end up testing back down a little bit later. So this is an important bar, actually. If bar 11 closes on its high, it will be the first good-looking bull bar we've had today. The location isn't great, and I don't want to buy above 11 regardless. But if it's a bull bar closing near its high, it increases the odds of a trading range day. And we probably should fill in the gap between the bar 9 high and the bar 7 low. So what is that? Well, that's trading range price action. What that is, you get a disappointing close for the bulls because it wasn't able to close on its high. And if you're a bear right now, it's kind of a tough call. It's a minor reversal, so it's probably going to get a lower high from bars 7 through 10. But it's also, it wasn't all that bearish to begin with. It's still a tight channel down, so again, still expect a second leg. But it wasn't all that great to be short to begin with, and now you have a bull bar closing near its high. So if you did take the sell below 8 and you said, okay, I'll just get out above the bull bar, now you're out above 11 and you broke even. So really, again, going to show why selling below 8 just not all that great. The best the Bears were able to do is make a 5 point scalp. So I don't know. Doesn't seem that worth it to me. So 11 is a high 2 on the open for the Bulls. So we have the Bull breakout attempt for yesterday's high, and it failed. Now we had a high 1 above bar 6 and a high 2 above bar 11. But overwhelming number of bear closes. The first 11 bars, we only have 3 bull closes. So obviously a little bit more going for the Bears here. If bar 12 is a bull bar closing near its high, it will show that the bears were buying back shorts above 11. So even if 12 is a bull bar closing near its high, it's probably not quite worth buying because it's just the bears buying back shorts. Now you need the bulls to start buying. Obviously, it's obviously all dependent on context, etc. But I would only be willing to buy above bar 12 if I could convince myself that bar 10 has a reasonable chance of being the low of the day and that we're going to get some sort of bull trend. And I'm not really all that sure of that at this moment. So I'm probably just not going to take anything regardless of if bar 12 is able to close on its high. So 12, relatively disappointing for both sides, I think. If you're a bear and you're short, this is your low one short. So selling below 12 is a low one short for the bears. But it's also first push down, pull back, second push down, pull back, and this might be a third push down. So you'd be selling a doji bar that's a third push down on a day where you've had one strong bear bar closing your flow. True that the Bears have had an overwhelming number of bear closes. They've gotten a lot more closes than the Bulls have, and that's good for them. But I don't think that it's all that great to be short. If it just sells off, it can just go without me. That's fine. I'm not that worried about it. I would rather sell a double top after a pullback to around the bar 8 high. So any bear who or any bull who bought above 11, where was their stop? I don't know. It's either really, really wide or really, really tight. So your stop is either below 10 or, probably somewhere around, below this because we might go here. So if I had to sell with a wide stop, I'd probably put a stop down here, which would mean you'd have to trade really, really small. So it's third leg down. It's difficult to get short, difficult to want to be short, but we are always in short and going lower. And sometimes the market does this where it'll start to sell off, but not really in ways that are all that great or super tradable. And it usually just makes more sense to just let it go. Again, your job is to look for the best 1 to 2 trades a day. And I don't think selling below 8 is best trade of the day quality. And I don't think any of the trades leading up to it are all that great as well. So if we get a reversal up, bull bar closing near its high on bar 14, do I buy it? Probably not. Probably just rather wait. This is a really climactic move down. It's a parabolic wedge. So again, we might be trying to test towards the tight trading range and the top of the channel or the bottom of the channel and the trading range that ended up becoming a bull flag. We might be testing back into this area. But for me, nothing to do. Remember that bar 18 is a reasonable area for reversals most days. So if we get a reversal up on bar 13, that's in more, or 14, that's more of a dead zone for reversals. So probably better to wait for a pullback and see if you can get another reversal up on bar 18 or 17. Or maybe, 16 through 20 is really the reversal, but the midpoint of that is 18. So that is the prime bar for some sort of reversal. You can see a lot of times, 17, 18, you get a reversal attempt. Sorry, 17, 18, you get a reversal attempt. Not as much in here. 16 reversal attempt, 18 reversal attempt. So 16 through 20 is oftentimes the area where the market will try to create some sort of reversal. We ended up reversing up here. Not a great reversal, but we did end up getting one. Again, I'm not selling below 13. I'm pretty okay with just letting this go. It looks really parabolic to me. 13 is probably the best looking bar. Pretty similar to 8. So one of the better looking bars, relatively deep in this probable trading range, I think. Again, the Bears have an open gap, which is good for them, but they only have, this is about to be their second bear bar closing near its low out of the first 13 bars. It's true that they have 10 bear closes and there's only 3 bull closes. So that is disappointing for the Bulls. However, this to me looks a lot more like a parabolic wedge than a bear trend. So I'm not willing to take any, or really, really willing to short. If we started to go sideways here and then got a breakout below the wedge, I would be willing to do that. But I'm not going to take any of these sell to close trades in here. So if we get a reversal up here and start to go sideways and then get some sort of maybe low too short around the sell climax high, remember the sell climax highs, the bar 8 high, the 13 high are going to be magnets. and areas of resistance. So if we bounce a little bit here and create some sort of double top, maybe around the 12 high or the 13 high over in this area, then I would be willing to sell that, taking a chance we break out below the wedge and get some sort of measure move down to around this area. Now, if you're waiting for a pullback and you're not getting one, what does that usually mean? Usually means you're feeling urgency, and it's possible that we're in some sort of bear trend. So for me, I definitely feel some downside urgency right now, but the urgency I feel is not over, outweigh what I'm seeing on the chart. So to me, it's okay to be short, like it's reasonable, but for me, I'm not really willing to sell anything here. I think this has looked like a leg in a trading range from the beginning. Again, good breakout or good bear bar on bar 8, but I'm not that sure that I want to sell it. And good bear bar on bar 13, but I'm really, again, not that sure that I want to sell it for the same reasons I didn't want to sell 8. But this is too strong for me to buy a reversal up 13, 14, so I'm probably just going to sit on the sidelines. 14 is a perfect bull bar. So let's say it's an inside bar closing on its high. It doesn't trade below bar 13, and it's an inside bar closing on its high somewhere up here. Basically perfect. Then you could probably buy it, but you probably need a wide stop. And the reality is you're going to get another leg down because this bear channel is pretty tight. So not really worth it. Also, we're 2.5 minutes into the bar, and this is still a bear bar. If this is going to be a bull bar, the bulls need it to become bullish really quickly. Usually, if you're going to get a bull bar in this context, in the first minute or two, it'll start to rally. So I don't think we're going to stay. I'm not all that convinced we're going to stay above the bar 13 low. So still nothing to buy. Still always in short. If you're short, your stop is above 12. So selling off back into the bottom of the channel, right? We had the spike from 40 to 51 on Friday, and then we had a trading range from 52 to 68. So it seems like we're testing that area right now. Doesn't mean we have to stop here. This is getting more and more dramatic. So again, but hard to want to sell any of these. I'm pretty okay with having done nothing so far today. I think that the best trade is so far of the day was selling below 8, but I don't think there was really any other trades that made a lot of sense. And I think even 8 was not as great as it could have been. So on 14 here, the bears are trying to get a close below the, well, you can see we had a bear channel. Then we broke out to the downside, and the bears are trying to get a sustained downside breakout and make the market go outside down. What are the odds we go outside down today? I don't know, maybe like 40% right now, something like that. So consecutive bear bars closing near their lows, 13, 14. We're still always in short. No bottom in sight. So if you're short, it's okay to be short. Your stop, it can be above 12. It can be probably a couple points above 14. You can see we have an open gap in here, and we have this open gap. So the bears now have two open gaps. So let's see what happens here on bar 15. Right. So what's happening with all the bearishness, right? Well, probably a bit more of a leg in a trading range. Do you buy above 15 if it closes on its high? It's probably okay for a swing trade. Uh, I think this is a really climactic move, but I don't like how many bear bars we've had so far today. I might do it with a wide stop at first, just to allow. Here's the thing: if 50, so first off, this is all barring, 15 needs to close on its high. If 15 does not close on its high, it's not worth buying. But if 15 does close on its high, you can probably take it for a swing with a wide stop. It's possible maybe we get an inside bar 15 and an inside bar 16. So you get an high after a sell climax. That would be a credible low of the day. But also, again, for the bears, it's possible this is just a pullback and we're going to continue down. We did not quite reach the 50% pullback. Bears sold a little bit before. So if it is, we do get an II. So let's say 15 is an inside bar and 16 is an inside bar. You can buy above 16 if it's an inside bar and take a chance we just channel up the rest of the day. And that this is the low of the day and that we're going to try and test the high. You can take a chance to do that. But that is if we get an inside bar. I'll pull up some examples I have of that. Parabolic wedge is a sell climax, so a couple of good examples I have. There's one particular one that I wanted to show. This, yeah. So you can see we had a sell climax on the open, an II on bar 12, and the market just channeled up. Usually it'll have a tough time getting far above the high. So this is an exception where we ended up getting a strong breakout to far above the high. But usually it won't get that far above the high. So if 16 is an inside bar, I will be buying above the high. And the thing is, if 16 is an inside bar, usually the channel up is difficult to trade. So what you do, this is a Walmart trade, right? Let's say 16 closes an inside bar of any kind, and then we trade above 16 before we go below. Then you can buy above it and take a chance that we've seen the low of the day, but it's going to move up in a way that's going to try and trap you out a bunch. So it's really a Walmart trade. So if 16 closes on its high, I'm probably going to buy, put a stop below 14, and go do something else for an hour, and probably just pause the video and just check in an hour on my management. So I hope it's an inside bar. There's not I've learned to appreciate the Walmart trades where I know I'm getting my money in a reasonably good spot, and there's no real management, and I can just take the trade and then walk away for a little bit. I don't think the context is incredible for the bulls to have a huge bull trend, so I don't think it'll do what it did last time. However, I do think it's going to be a reasonable buy. You can see we're getting support in this area that I was mentioning, and we're a little bit past the 50% pullback. But it's not a surprise that the 50% pullback of this entire thing is right in the middle of the range. So really just waiting right now. I don't think it's going to end up being an inside bar. No such luck. So no Walmart trade for me today. So 16. Not an inside bar. It's a bear doji or a bull doji bar. So it's a low one short for the Bears. And the Bulls, they're hoping that 15 is the low of the day, but it was not able to close on its high. So they're hoping it's a parabolic wedge from the parabolic wedge to bar 15, and we're going to get a big reversal up. But this, to me, was relatively disappointing, the way bars 15 and 16 behaved. So 17, we're probably going to go below 15 and maybe get another reversal up. I'm not sure. We'll see. Is it possible? Well, it's definitely possible, but we could just get one of these days. I don't even think it's actually on the. There was a day like a month ago where, maybe not even a month ago. It was during this month, I think. Yeah, where we just did this all day. Is it possible that we do something like this? Yeah, it is, but I don't know. I think this is a really, 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 really tight channel and looks good for the Bears. It does get climactic a little bit, but there are less reversals up. To me, there's a little bit more for reversals here, and this looks a little bit less like a big bear trend. So, what if 17 is an outside up bar? It would increase the chances that we're in a trading range, but I still think the Bears might look at it. Even if 17 is an outside up bar, they'll see 15 up to the 16 high as the first leg up, and then pull back on the 16 high to wherever the 17 low is, and then the 17 low up would be a two-legged pullback. So it would be one pullback, maybe two. So the Bears might look to sell some sort of low two in that area. However, if it closes on its high, it's really not all that great for the Bears. I do think it's an increased chance that we've seen the low of the day if 17 is an outside up bar closing on its high. However, you know, I'm not sure I'm willing to bet on it yet. We'll see. I do think if this is a trading range day, we're going to close this gap. So should 17 close on its high, I might just buy a small position and take a chance that we've seen the low of the day. But I don't know. I'll know in a minute or two. I'm not going to turn the screen off for the next couple minutes because I'm thinking, so might have a few more things to say. But 17 would need to be perfect if I was going to do it. Again, parabolic wedge on the open. I get a gazillion examples in here. None of them are, I don't know, maybe a little bit something like this, but the opposite. You can see actually we got a similar pause, but disappointment and then down, and then that could be the two-legged pullback, but yeah, not really all that great. So if you do, let's say 17 does close on its high and you do buy above it, then you are taking a chance that we have seen the low of the day. And it's not a very likely trade. It's probably still somewhat of a Walmart trade, and you're going to sit to the pullback. So if you buy above 17, the stop is below 14. It's not below 17. And you can only buy above 17 if it closes on its high. It's still potentially a two-legged pullback to the moving average. The Bears, they know it's a wedge. Everyone sees the wedge, and the Bears are hoping that we're going to get a failed breakout for the Bulls, and then we're going to get a breakout back down below the wedge. What's the issue with buying above 17 if it closes on its high? You might be buying too high. I think, in general, you want to buy a reversal from up lower. So we might get one more bear leg down. But I think if it closes on its high, it's pretty okay to just buy, take a chance. But it's going to need to basically be perfect. And I don't think it's going to be perfect. If it is, I will buy small. By perfect, I mean close above the bar 16 high. However, these three bars, 15, 16, 17, three straight bull bars, is a problem for the Bears. It's the first time we've gotten even two bull closes so far today. And now if we get three, it's going to be even more disappointing for the Bears. So let's see. It should be a bull close in a couple seconds. So 15, 16, 17, three straight bull closes. It's possible the Bears just give up and we get a big bull bar on 18. And if that happens, nothing you can do about it. I'm not willing to buy with these tails on 15, 16, and 17. It's probably a micro wedge on a lower time frame. The three tails. So three attempts down. So micro wedge. Bulls want breakout above micro wedge. Measured move up. towards the sell climax high. Bears low 1 short 16, pullback 17, low 2 short 18, but not that ideal. What would I like to see? I'd like to see one more reversal up. So, like I said the other day over here, if this just fails and then sells off without me, I'll probably just let it go. And I think in here as well, I'm going to put more of my energy into thinking about what a good looking reversal up would look like, and just keep in the back of my mind, maybe we get a downside breakout. But you can see, like I mentioned earlier in the day, we ended up finding support in this area. It was a very logical area for support. So bears might just buy back shorts here, and we might get a give up bar to the upside. If we do, I'm not buying it. It's too much, too large. That could be what's happening. See, the thing is, when you get the 3 straight bull bars, everybody knows that it's most likely a trading range, and it was parabolic wedge anyways, so it's probably a trading range. So bears just might give up, and we get back to between the 10 low and the 14 high. It's possible that happens. So again, if we close this gap, let's say we get a 4th straight bull bar, but it's more of a doji bar. Could be kind of similar to over here where we go a little more sideways, and then the bears just give up the way the bulls just gave up. But it looks like we might end up getting a bull bar here. If we do, let's say we close the gap with the 10 low and then sell off a little bit and get another reversal up, that'd be a reasonable buy trying to get back into this gap, in my opinion. Okay, so 18, another bull bar, but are we always in long? We might be. Um, if we are, it might be more brief. Again, I would like to see us pull back here on bar 19, because once we got these 4 straight bull bars, to me, this is not going to be a big bear trend. This looks like a leg in a trading range. And the target for the leg in the trading range is this gap, obviously, and this gap. So, again, I'd like to see us pull back and get one more reversal up on maybe bar 20, but I'm not that sure we're going to get it. So, what are the chances we get all the way back to the high of the day? 30%. Maybe something like that. Bulls need a good looking reversal and a lot of follow through. Again, 90% chance we've seen the high or the low of the day. So most likely we've seen the high of the day, if anything. I think the only really credible stop order today was 8, but I didn't think it was very good, even at that. Pretty okay with having done nothing so far today. So the Bears want a low 2 with 19, but do you want to sell below that bull bar? No, not really. I think if we do pull back here, there's going to be buyers below 19, and we're probably not going to get a very deep pullback. Probably going to be buyers pretty quickly, but I'm just pretty much looking for, again, now I'm looking for the, earlier in the day I said I was looking for the Bears to pull back, but I wasn't sure they were gonna, and it seemed more likely that I was not going to be able to get filled. Here, I'm looking for the bulls to pull back, and I just want another bull bar closing near high. So we've now pulled back below 19. And if we get another bull bar closing near high, it's probably going to be reasonable to buy with a wide stop below 14. So big risk, not great. And look for, gap closure with the bar 7 low and the bar 10 high. The Bears are able to keep both the gaps open for now. However, 5 straight bull bars, not very good. Is it reasonable to just buy the market and put a stop below 14? Probably. It's probably not unreasonable, but you might have to sit through a deep pullback. So bulls really want a pullback here and another reversal up. So bulls might be stepping in around a 50% pullback here, somewhere down here. So we're in that area. Move the bodies. I don't know, maybe we get one more new low, a failed breakout below the 18 bar range, and then some sort of swing up. The Bears still do have 2 open gaps. So their argument is that they have 2 open gaps. They have a second reversal down, bar 19, so a low 2 short in a possible bear channel. They want a breakout below the parabolic wedge that happened to bar 14, and they want a measured move down. What are the odds that they get it? Well, I'm not willing to sell unless 20 and 21 are strong bear bars closing near their lows. So let's say bar 20 stays this size and closes on its low, and then bar 21 is exactly the same as 20. Basically the same size. Basically, you get 2 completely perfect bear bars closing near their lows, and 21 also breaks out and closes below the bar 14 low. Then I would probably take that short. Right now, to me, this looks like it might be more of a pullback in a bull trend, or an early bull trend, but really just an early bull leg in a trading range is probably a more accurate statement. So again, I'm looking for a reversal up for the bulls. It's not surprising that there were buyers scaling in below bar 19. It's a bad short. So disappointment on 20. Bulls, if they get another bull bar on 21, it might be a third leg up, but because you have the first leg 15, 16, and then pull back below 16, then you have 17, 18, and then pull back below 19 on 20. And so it's reasonable to argue that 21, let's say it's a bull inside bar closing near its high. That looks like, I don't know, bar 68 yesterday, something like that. Some bears would argue that it's a third leg up and that we might get a double top with 19 and 68. And the bulls would argue that this is probably the bear leg down was a leg in a trading range. And so now they want a leg in a trading range as well. So a bull leg within the trading range. And I think the bull argument is going to be a bit more credible here. So if bar 21 looks like a bull bar closing near its high, like bar 68, then I will take the buy. What if it's a bear bar closing near its low, somewhere down here? Probably not. It's probably reasonable to sell, but I don't know. It might be down on 20, up on 20, and then down on 21 if 21 is a bear bar closing near its low somewhere down here. It would be a lot better for the Bears if 21 was able to close below the low of the day and be really, really strong. But even then, I'm not that sure. A good way to think about trades, the way that I try to think about my trades is, if I lose this trade, am I going to regret taking it? Is a big part of learning to narrow down your selection, because there are probably 10 trades a week, for me at least, that I see that when I take them, I say, okay, cool. If I lose this trade, no problem. I still think I did a good thing. Still think I was right. And then there are probably another 15 trades a week. So the 10 trades is the best trades I see. And there's probably another 15 trades a week that I look at and I say, maybe, but I don't know. And those trades, when I lose them, I feel really, I get upset with myself. And even when I win them, I don't feel that great about it. So I've basically just really tried to cut out taking those trades. So if 21 can close on its high here, I'm probably going to take the buy and put a stop below 14. What is my premise, right? Well, the Bears could argue third leg up. I think more accurately, they would argue first leg up, pull back, second leg up. So possibly a second leg trap. They want a reversal down, maybe some sort of wedge, 1, 2, 3 of some kind to the moving average and a reversal down. I think if I'm buying above 21, I am going to have to obey my stop below 14. So what's most likely going to happen? So I would rather this stay an inside bar. I don't think I don't think I'm going to be that lucky, but I would rather it stay an inside bar. See what happens. But I lost my train of thought as the bar grew. But obviously, I think the bar 10 low is the first target for the Bulls here. Like to see this sell off a little bit because it's okay that it's remaining so close to the high. In an ideal world, it'll just sit right here and not get any lower or higher. But it's pretty unusual for that to happen. If we're getting so close to not being an inside bar that I'd be pretty surprised at this point if it was an inside bar. So I don't mind that it's pulling back a little bit here. It increases the chances to me that we're going to get an inside bar. As long as it remains in its upper third, it's pretty okay. And again, in an ideal world, yes, it would stay on its high the whole time, and it would close really strong. But usually, if it's sitting right here, right at this high, I mean, every high and low is resistance and support. It's some sort of magnet, right? So anytime you're really really close to this high, and it's trying to trigger above it, it's probably going to do it. Doesn't mean it's going to be successful, but it's just usually going to trigger. So again, ideally 21 would have sat right on its high tick for the whole time, but it's just probably not going to happen. So now I would like to see 21 close on its high. Doesn't look like it's going to happen. Closes 2 ticks higher than this, I think I'll probably buy. Yeah, just not willing to do that. So I needed 21 to close a little bit better than that. So could just be 2 legs sideways to up. It's kind of funny, I make these videos, and I would say so. Like all of last week, besides Thursday and Friday, but Monday, Tuesday, I think Wednesday, I'll just check. Um, Pretty much all of those days, not this day, but most of the days, I took a trade within the opening 10 to 15 bars. And pretty much the prior week before that, the entire prior week, I took a trade within the first 10 to 15 bars. And then I started recording, doing these recordings for live, and I just haven't seen anything that I've really been a huge fan of in the first 18 bars of the day. So it just happens sometimes, though. So 21, another bear bar, so far at least. Yeah, I think the Bulls are disappointed that 22, another bear bar so far at least. 21, not able to close on its low, which I think is disappointing. If 22 becomes outside up, maybe you can buy it. What am I looking for at this point? I mean, I think we're going to get below the bar 15 low. It would be pretty. I thought the Bulls had a reasonable chance on bar 21 to make something happen. They didn't. So you can see a lot of Bulls who were front running it are probably a bit disappointed with how it ended up going. So if we trade below the bar 14 low, you can probably start to look for a reversal up. I'll probably run this video until about 9:45 or 10, something like that. But So if 22 closes on slow, I think we're always in short. I'm not sure we were ever really always in long. I think we're always in short right now. And we were trying to flip to always in long, but we just quite never were able to. So we might go a little bit more sideways. Maybe we get a midday reversal, or maybe we still have the two open bear gaps. So it's credible to think that this is going to last all day. It's just that this doesn't quite look like it's going to. So for the Bears, it's a parabolic wedge to 14, and they now have their two legs sideways to up as a pullback, and they now want to break out below the parabolic wedge. And the Bulls, they're hoping that the parabolic wedge is still in effect, and we're just trying to get a double bottom with bar 15. They don't care if it's a lower low double bottom or a higher low double bottom, but they just want some sort of double bottom of 15. So for me, I'm willing to sell if we get a strong close below the low and a possible breakout and a possible measure down. So if 22 closes on its low and then 23 also closes on its low, you could sell that and take a chance that we get down here. But for the Bulls, if they can get some sort of so let's say 22 does close on its low, and then you get an outside up bar on 23, that would be a credible buy. 22 closes on its low. It's probably an okay swing trade, betting on a second leg down and a small pullback bear trend day. But it doesn't look like that's going to happen. 22 ends up closing outside up really quickly here in the last couple of seconds. It would be a reasonable buy. I think it's just going to end up being disappointing for everybody, though. So, disappointment for everyone. What do you do? Probably nothing. I would just personally stay flat. I'm kind of just waiting for a clear breakout below the parabolic wedge or a good looking reversal. Until I get either, I'm not really willing to do much. So, what if 23 closes on its high? Um, it's probably okay for a swing. Might do it and put a stop below 14. It's not that likely that it works, but math is probably reasonable enough to take it. Put a stop a little below the reality is though we probably shouldn't fall too far if this is going to be the low of the day or at least the next couple of hours. But again, the Bulls are just not doing enough. So this is interesting. This for me personally is when I start thinking about a breakout the uh, below the parabolic wedge and a measured move down. Bulls have had a couple of chances to try and basically 21 if it could close on its high. If 23 could close on its high, those would have been incredible chances for the Bulls to um, to get a reversal up. And instead, we're getting basically doji bars. So to me, I'm starting to look at this and think, well, why aren't the Bulls getting a reversal up? This is an area where it was logical for there to be support. And if they're not getting a reversal up, eventually what's going to happen is the Bulls are going to give up and we're going to get a downside breakout. So for me, the Bulls have had a couple of credible chances to get a reversal and they're not getting them. So it's possible that we get a breakout below the parabolic wedge. And I think now, if 24 is a bear bar closing near its low, it would be a little bit of a better sell. You can see that we were never even able to get to the moving average. So this whole thing might end up being a three push pullback. One pullback, two pullback, three, and then if 24 can close on its low, that could be where the bears start to find more sellers here. So let's see. I think if it does close on its low, I will probably take the short. Just taking a chance. The reality is, if let's say it's an inside bar closing on its low. Okay, it's not. Yeah, if this closes on its low, I'm probably going to sell it and put a stop above 19 and take a chance that we break up below the parabolic wedge. And if we get a bull bar, so let's say you get 23, closes on its low, I sell below 23 and 24 is a bull bar closing on its high, I just get out. Because the reality is, if this is going to be a bear bar, so if this is a bear bar closing near its low and it is going to be the breakout, we're not going to trade back above this high. We still have the open gaps, right? And so the open gaps to me symbolize it's a possible bear trend day. These two open gaps. I didn't think they'd stay open, but now that we've had the parabolic wedge and the bulls have had two reasonable attempts to get a reversal, I'm starting to look more towards the downside than I am towards the upside. But I'm willing. So Bulls had two chances. I'm willing to give the Bears basically a chance here. If 24 can close on its low, then the Bears get a chance. But it's going to need to move. You can see disappointment for everybody. So might get another attempt up from the Bulls here. We'll see. If 24 can close on its high, you're buying the top of a tight trading range. So not as good as it could be, but still a possible low of the day, bar 14. Remember, if you recall during bar 20, or as we started to sell off below bar 19, I mentioned you could probably buy the market and just have a stop below the low today. But this is the problem: is that it's a lot of times just going to go really sideways and be rather frustrating, and it's never going to end up giving you what you want. So again, if 24 closes on its low, I'm going to sell it. I'm going to sell small and take a chance that this is going to end up being its multiple back bear trend day or something along those lines. Basically, another leg down from the parabolic wedge. That's what I want. So maybe here, maybe somewhere down here, maybe a leg one, pull back, leg two. But we might just go sideways for a little more. So again, I'm waiting on the breakout. I'm pretty positive I'm going to trade a breakout when we get it in either direction. Just depends on when we get it. So if 24 can close on its low, I don't think it's going to, but I'm ready if it does. So, yeah, I'm not going to sell that, but if 25 closes on its low, you can sell that. 24 started to sell off in the last couple of seconds, but you can see it's just not closing on its low, so I'm not quite willing to do it. 24.5 is a bear bar closing near its low. It's moving pretty frantically right now. You can see in the middle of the bar. So it's not surprising if we start to move quickly here to the downside or the upside. We could get a surprise breakout to the downside on 25. And if 25 is a bull bar closing near its high, it would probably have to be an outside up bar for the bulls to be all that interested in something like that. I suppose any bull bar closing near its high would do. But again, the way this bar is moving 30 seconds in, I think we're probably going to do something. The market's trying to do something right now. Just the question is, are the bears going to win and get a bear bar closing near its low, or are the bulls going to win and get a bull bar closing near its high? We'll see. To me, it looks like we're going to try and get the downside breakout. Again, if 25 can close on its low, I'm going to sell it. And if 25, becomes a surprise bull bar, probably going to be okay to buy it. But I think the Bulls had a few chances to try and reverse the market to the upside, and they were not able to get 21 to close on its high, and they were not able to get 23 to close on its high. So 24, you can see, during the last couple of seconds of 24, it sold off. And if 25 can close on its low, then that's going to be a credible sell, taking a chance, break out below the wedge, and the gaps stay open. So if you do get the bear bar closing here, it's low 25, your stop's going to go above 19, and you're going to be risking 11 points. What are you trying to make? You're probably trying to get an outside down day, probably something along those lines. So you might be risking 11 points trying to make 30, and your probability, might be like 40%, something like that. So I think that's a reasonable thing to do. What if it's an outside up bar closing somewhere up here? Then you would be risking 8 or 9 points, and you're trying to get the market back up into this area. So 2 to 1, but if this is a good looking bull bar, it might be more 50-50. So we'll see what we get. On a double bottom 15-25, but they're going to need a really good looking bull bar. The Bears want this to close on its low. A doji bar here is not going to be enough for the bulls. Now, if we get a doji bar on 25 and the 26 is a bull bar closing near its high, that would be credible. If 25 can just get a little bit bigger, I think, and close on its high, it's going to be reasonable. We're probably still always in short, but as you can see, it's not doing what either side would like it to do. So let's say this next bar, 26, is a bull bar closing near its high. That will be a credible buy. And if it's a bear bar closing near its low, 26, probably also will be reasonable. Second, so if 26 closes on its low, I'm probably just going to take the short and um, probably just end the video there. And, I might not end it. I'll pause it for a couple hours and then come back, or whenever I exit the trade, I'll come back with my management of the trade and then just be done. Bears want 26 closing on or near its low. If it does close on or near its low, I'm probably going to sell it and get out of the bull bar. If it closes something like this, I'm probably not going to do anything. And if this becomes a decently good looking bull bar, I might buy it. Again, the issue that the bears face is you're selling potentially the bottom of a trading range. So doesn't look like it's going to be anything worth doing. Yeah, disappointment. I'll keep the video going for one more bar in case we get something here. But for now, probably not much worth doing. The problem if you get a big bull bar on 28 is you had 3 straight bear bars. However, if we get a good looking bull reversal bar, you know, something like 55. So if we get 55 right here, closing near a tie, I'll be willing to buy. The bulls have a double bottom, 26.15, but bear bar, and we haven't been able to get to the moving average. So the question is becoming, are the bears going to get this downside breakout? Now I'm starting to look to see if. Hold on a second. Now I'm looking to see if the Bulls are going to get another chance because the Bears aren't quite doing what they need to do. So there we go, right? If 27 closes on a tie, I'll be buying. And again, if it does close on a tie and I do take the buy, I'm probably still gonna end the video and then or pause the video and circle back in an hour or so and mention my management. So I'll keep it on for the remainder of this bar. If this is a bull bar closing near its high, it's going to be a pretty credible buy for the low of the day. Again, if this is a strong bull bar that looks exactly like it does, closing on its high, to me, that means that this is going to be a trading range day. If it is going to be a trading range day, it's going to be reasonable to buy above this bar and look to close this gap first and then this gap. But I would really like to see a bull bar close near its high here. It's going to be a bull surprise, a higher low double bottom. So it'll be a higher low with this and a bull surprise. And yeah, disappointment. All right, well, I'm probably just going to end the video here. There's a couple of chances I thought that we could have had a reasonable trade today, but obviously just didn't end up finding anything. So I'm sure I will end up taking a trade at some point today. Maybe if this is going to close on its low, but I don't think it's going to. Yeah. All right. So disappointing. Probably buyer's not too far below, but again, how much do you want to buy in this area? Let's say that 28 is a bull bar closing near its high here. I'll probably still take that buy, but I'm pretty neutral right now, and I'm going to need to. Someone's going to need to show strength at some point. So if we get a breakout below here, bears will sell, looking for a measured move down, and if we get a bull bar closing near its high, bears will probably give up, and the market might turn into a trading range. So yeah, that's going to be it for this video.